Welcome to Not Financial Advice, episode 3, here with Benji Wilson. And today I get to talk about how much money I've lost, and hopefully that Benji's lost a little bit more than me this week in the ups and downs of the market that we've had. But we'll go more into that. But Benji, welcome.
Thank you, short snout, Peter.
The very short snout, but not yet inverted snout.
Not yet.
Not yet inverted
receding
snout.
into the skull.
Yeah, we'll see how we go. So before we get started, let's kick on with some running totals.
Yeah, I like that format. Let's jump straight into it.
I like that.
Did you want to lead the way this week?
Yes, sure, I can. Give me a second while I pull this bad boy up. Let's see if you feel. Gosh, fuck. That's good. Well,
just before that, this week is an example of why we are definitely not financial advice.
This is definitely not financial advice. It's just advice around what we are doing financially.
Just documenting the steadiness of our $30,000. How we hover around that number.
Love it, but it is really good. So I can see here this week, $30,118.33. So we are $118.33 ahead. Doing good. Yes.
We're up. There is still a snout.
And there's Benji, it looks like $30,583.77. So,
which is funny because I thought, this is why I'm doing this, to get a little bit better with numbers. I thought I was at 30,500 up into the point where I just put it in that graph 2 seconds before this call. I thought I stayed stagnant, but I actually did get a small increase, slow and steady.
I like it. Now, I know you're not good with numbers, but 30,500 is definitely more than 30,334.
That's more. The calculator's here to help me understand that.
Yeah, no, the calculator definitely helps you understand that. That's why we've got this column here. You can see me highlighting.
That's green. That's helpful.
Hopefully it's green.
What happened to you, bro? We'll have these underneath us on the edit. I'll make sure that they're nice and big for us.
Wait.
But what happened to your snout? It seemed to
no. Before we go any further, I want to ask: are these actually different? I thought this was just grey. Are they actually different colors?
Jenna advised me that they are different colors.
Gotcha. Because I'm colorblind, and I hope that's okay. Are they green and red, maybe?
No, they're both green. You're doing really well.
Sweet. I can see mine's negative at least, so that's not good. But I thought I might jump into what's happened with mine.
Yes.
So you remember last time I invested in a few things so far. So we did Webjet, we did Tyro Payments, fantastic companies. And we also did the small index fund of cryptocurrencies. So to start with cryptocurrencies, they've gone down a little bit. They were quite, I was thinking about $2,000 up on that $15,000 investment earlier this week. But there's a lot of volatility in the market there. And for me, it's going, I don't think it's in the short run going to be 0 to 100, right? But it's going, I trust that by buying into the biggest 10 coins at their market cap, in the long run, this is going to pay off. And when I say long run, hopefully 3 to 6 months. But you've also got to be thinking 30, 40 years in the future, that the value of these is going to go up a lot. And I think this episode is going to be a really good one for people who are watching, and it comes down to the emotions. And I think it was Warren Buffett that said, if you can't control your emotions, you can't be an investor. And it comes down to when things are going down, understanding why you bought something. Because and Benjamin Graham talks about speculation versus investing. And let's be completely honest here. Crypto is speculation because there's no real, from my understanding, there's no real intrinsic value. So we can't figure out from what it's producing, what the value is going to be in 5 years, 10 years time, and then discount inflation, et cetera. So we are speculating there. But when you're investing in things and going, well, I understand why I bought this company. I understand their earnings. I know exactly what I expect them to do and where that company is going, which is what we've talked about with social arb investing too, is going, well, if the price actually drops lower than what you bought it for, that's not a bad thing. That's a fantastic thing because it means you should be doubling down and putting more and more money into that. Because if you bought it at, let's say, $5 and it's now $4.50, you should be like, oh, yes, this is awesome. Yes. Because it means that it's cheaper than it was. You can put more money in it. You can buy it at a discounted price because you've already reasoned it's going to go to here. So you're going to make more money from that happening. And so that's the way I'm looking at my investments this week. So Webjet's gone down we're here in Australia and Sydney's gone into their little COVID meltdown. So there's all that kind of shit going on at the moment. So all over the world, and Webjet's also moving into the summer over in the UK and America, and they're also opening up. So I think there's a lot of positives there, but people are looking real short term at what's happening in New South Wales here in Australia and going, oh, get out of Webjet, sell those shares, take the profits you can, or cut your losses. And I think it's a really good opportunity personally, and I'm going to be looking at buying more of them because the price is going down. So for me, I still stick with the reasoning, and I'm doubling down on the fact that Webjet is, for me, the right share to be buying at the moment because it's going to be worth a lot more in the future. Tyro, same thing again. What we saw was in America, there was a big tech sell-off, people taking profits, etc. And so Tyro's share price dived. It dived in the same week that they had more profits than they had on the previous week. They had more profits than they had on the previous year. So I'm looking at it going, this makes no real sense from like the business point of view. From behind the scenes in the business, they're getting better and better all the time. And so I'm just putting more money in that now because guess what? Like, it makes so much sense. But every time that share price dives down, I think they lost like 6% or something. I'm like, this is a fantastic opportunity to buy more when it's discounted. So that's where I'm at with Tyro at the moment, Tyro and Webjet. Fantastic. With the crypto, I've got the investment in there, which leaves me with $5,000 to play with. And I think right now we're talking about our previous investments. We'll touch on that in a minute, where that next $5,000 is going to go. And I haven't resorted to selling feet pick just yet. But if we drop below 30,000, OnlyFans, Pete's Only Feet. Oh boy, we're going to be having some fun. Get these little stumpy things out there, extra medium size, of course.
Hey, I'd be scared if you started OnlyFans.
Skyrocket. But what about yourself? So tell me about your trades. You've obviously got your snout in front. You've made a little bit more profit. I'm interested to know. And also a caveat to that is I know you're invested in Apple in the American market, whereas my investments are here in the Australian market. And I saw that after our market closed on Friday, it was then Friday in America, and there was the big tech gain overnight. So there's a 1.4% increase in I think the NASDAQ as well as the S&P 500, and Apple went up a lot too. So I imagine come Monday, and this is where I got stitched up, is come Monday, we're just going to shoot straight back up. So we're going to see a massive increase, and I'm like, gosh. So that's one thing to just keep in mind is when you are investing in those American stocks, you had that happen, and we'll see that reflected here in Australia on Monday. So
yes, which is another social arb play. I was actually thinking about that today. Is like the social arbitrage between nations and how you see like Ethereum seems to follow Bitcoin. When Bitcoin goes up, ETH goes up with it. Or when the US tech stocks go up, Australia waits like 1 or 2 days and is like, oh, tech stocks are going up. Let's get into our tech stocks. So definitely a social arb play. I'll share my screen here. You can see I was researching this really cool. Can you see my screen?
Yes, it's a really cool company.
Interesting looking stock that I've got a 3% discount on this week. That might seem to move some money into.
Interestingly, if you want to jump into that, hit their 5-year on that one. And what you see is that they're only a relatively new company, and they're more profitable than they ever have been. And if you sort of go back to where they were pre-COVID, which they're much more profitable, and keep going, that's COVID there. Yeah, so you can see at the top there, what do they say? $4.40 was their high, and they're currently sitting at a $3.65. And then it's going in and understanding, what's their price to book ratio, price to earnings ratio. They've got really no debt on their balance sheet. So they're a very well-positioned company to move forwards, and their income is increasing steadily. Like, it's a steadily increasing income. And when you're looking at a business, and this is the way I like to think of stocks, is think of buying a share in a business like you're buying that business. And would you want to buy a business that has no debt and their profits are increasing consistently? It makes a whole lot of sense.
Pete, can you, because I know some people who are watching this will be like more financially savvy, but also I know like someone like my mom and people who want to be more financially savvy, but don't really have the foundations. One thing that really helped me was understanding exactly what market cap meant, and it's how it like reflects the price and how you actually make money. Can you, as someone who's very good or decent at fundamental analysis, can you give a brief description of that would be helpful?
I think the easiest way to think of this one is if you've got a share price, which is, let's say $3.65 in this example, and then a market cap of 1.875. Is it 1.8? Yeah, $1.87 billion. Yeah. Think of it like it's 1.87 divided by 3.65 is how many, what they call outstanding shares they have. So how many shares are available publicly traded. Okay. And it's literally the number of shares that can be publicly traded times by the share price is your market cap.
Mm-hmm.
So when you think of market caps, I think don't think of it a market cap so much as like it has to be like a, 10 billion or 20 billion, or one company is better than another because it's a 10 billion company and that company's a $100 billion company. So you should be going with a $100 billion company. Things to remember: the larger the company, the harder it is typically for it to go out of business. Okay. For it to just collapse on itself. The smaller the company, yes, the more likely that can happen, but also the easier for it to double, triple, quadruple, 10x. Okay, so small companies, it's much easier to have massive percentage increases than a large company, but they can be more risky. Any company that sort of sits under $3 billion is one you have to, I believe, a lot of research into understand, and this is one of them, a lot of research to understand that company before going into it, because there's not a very large share price. And if it's not a very large share price, not a very large company, you want to be making sure that you're making sound investment decisions. And these decisions aren't going to end up costing you and losing you money in the long run. Just keeping in mind that those are the companies that are more likely to go to zero, but they're also more likely to 10x.
Mm-hmm. Yeah, very good. So to put it in very simple numbers, if the market cap was $10, if a company's worth $10 and their share price is $2, there's the total of 5 shares that equal that market cap. And in order for you to double your money, another $10 would have to be invested in that business. Market cap goes to $20. Share price goes to $4 because there's only still limited amount of shares. There's still 5 shares. They just become more valuable each share. So jumping over to the snout measuring sheet, we'll just pause here once more just to see this beautiful yellow line crossing over here, making a small shape.
What shape is that, Benji?
It's the most beautiful shape you can get.
It looks kind of like a sunset, I guess.
It does. The sun setting on Pete's snout. That's what that is. So I'm crossing into my investment sheets here because I think the first one that I'd like to talk on, or maybe the easiest one, is the Apple, the US stock that I'm in. Week 1, the biggest lesson I learned from Pete is you have to have money in the game in order to make any substantial gains. For example, I hit a 77% return on an IPO, which I have some exciting news about these IPOs. I did some literally 20 minutes before this. My week was sort of a lazy week, if I'm honest. And the 20 minutes before this was the only sort of research I started doing. But I found some very interesting information that you definitely want to hear, Pete. I know you'll be excited by it. I averaged at the last 31 IPOs on WeBull and got exactly the average return. So hit the like button to see that. But you can see I only put $98 in because I'm like, I don't know what I'm doing. It's not financial advice. I'm just testing stuff. I'd like to see what gets the best results. But then I see Pete had like $10,000 or $15,000 in crypto and it goes up like 0.5%. He's like, oh, I'm up $1,000 or something. It's like, okay. So honestly, it was one of the best lessons I learned. And it was in that Chris Camillo book too. It's like, the more risk you can take, the more money you can make. So the more you have in, and that's where options trading, where you can get leverage on your money, is going to be very handy, which I'm going to slowly explore. But so Apple is the big one that I'm in. I'm in 9,994. It's now valued at 10,447, $453 US return. Actually up almost 5%, which is ridiculous because I looked this year and it's only up like 8% this year. So in the last week, it's up like 5%. So
solid.
Some could call it a lucky snout. Others could call it having some skin in the game somewhere.
You got to have pushing in the game.
A little skin in the game. That's pushing obviously more than I'm actually up. So where you can see the only trade I'm currently trading down at, and this goes on to what Pete was saying, is when you know the fundamentals, or in social arb, when you know a piece of information disparity, meaning you know a piece of information about a stock that you don't think is realized by the market price or reflected in the market price yet, when it goes down, you should get excited because it's on sale. I learned this from Pete, just repeating what he says. But you can see it's actually down more than Apple's up. It's down 4.62% since when I bought it. And I've got I put 3,600 in. It's now worth 3,500. Oh, yeah, because it's US dollars. I'm down 170 US, down 220 Australian. So what I actually did is, because this was a DumbMoney trade. Now, if you don't know DumbMoney, go watch our first 2 episodes where our idea of journaling, documenting our journey came from DumbMoney, and they do social arb trading on information disparity. Now I'm like, okay, this is going down. It's a little bit concerning because it's like, there's no reason like a stock can't halve if something happens. So I'm like, I don't want to really show up to one of these weekly things down $2,000 to $4,000. So I'm like, let me go get more educated on why I actually entered this trade in the first place, to see if I need to exit or double down or just leave it. And so I went back and watched that DumbMoney episode, and I'm just like, I need to put more money in Discovery. And I think I went through briefly last week on why I got into that. So I'm just going to reel off a real short list of notes I took from their breakdown of this. But basically, Discovery, they create content, and they went from being a cable content provider, providing television series for cable companies, to actually hosting their own platform, like a Netflix, a Disney Plus, a Hulu. I forget what that's called in Australia. What's the green sports one? There's Binge, or there's another one, Kayo, something like that. But they're popping up everywhere. And Discovery, in its first, I'll actually pull up that chart too, because I understand it better now. Disc A. You can see they announced that they were going to do this right in late December, and their stock absolutely rallied because they have so much content. They got 55,000 hours of content, and basically they own most of the views on the cable subscriptions that people actually pay for, but they don't own the cable company. They're just selling it to the cable company. So they're like, we're going to put our own platform out, just like Disney went to direct to consumer, direct to the actual people viewing it. And their stock absolutely skyrocketed. And now they have like one-to-one connection with the viewer. They have more people watching it, more advertising. Discovery have had the same thing. Now, the concerning thing here is you can see stock went from $25 to $75. So it tripled. And then it dropped. Now, I described this last week, but this was an over-leveraged hedge fund who had 5 times leverage on their money, and their broker who was loaning them the money felt like this was too risky and had a margin call, and had them hand their money back, and the stock absolutely dived because they wanted their money back like today. So they needed to sell for whatever the going rate was. And as you start to sell your stock and you got such a big chunk, you have to sell it cheaper and cheaper and cheaper, and yet you sink the overall price of the stock. So that's what happened here. And you can see it's been on a decline all the way back down to almost $24 before they announced their online platform. Now, and it's not my idea, it's DumbMoney's idea, which I am getting on the bandwagon of, is that their numbers fundamentally are incredible. They had 5 million subscribers in their first month of launching Discovery Plus. They had 7 million subscribers by their second month, so they added another 2 million. They had 15 million subscribers by the 4th month. Now, these are paid subscribers. They're paying $6 a month, so like the Netflix thing. And they haven't released after 4 months. It's been about 6 months that they're out. So I'm guessing they're going to be around 20 million subscribers. And you can see it's a very healthy growth rate. They're getting 2 times the amount of views on their shows than they were getting on cable. They're documenting high rev per user. They own people's data. So those 20 million people, they actually have the data on what they're watching at what times, and they've got that algorithm, and they can actually sell that data to advertisers or use that data to make their algorithm better and actually get more watch time. Each active user, it's not every user, but each active user watches 3 hours of shows on Discovery Plus a day. I'm like, what the hell? That's so much time on one app of Discovery Plus. And then they've got 55,000 hours of content, because what's Netflix, Amazon Prime's problem? They need more content. Like that is the problem with these things, is they need to continually create content. These people already have the content, and now they're reverse engineering and getting the actual users. And a stat that shocked me is that the top 12 shows account for only 10% of their views, meaning that people are so well diffused through all their content, and they really are just like watching what's in front of them. And there's not like Netflix where like Queen's Gambit comes out and everyone signs up for that and then cancels until the next one comes out, which is Netflix's big problem. So I'm very confident in the stock over the medium term. Long term, DumbMoney said this too, is like YouTube and TikTok and all these other things will probably be where people spend most of their time. But in the medium term, these guys are going to come out with their next financial report. And I think it's going to be good. That's the bet that I'm making. So I said felt like putting more in, but I'm going to leave it for now because I do have other ideas where I want to put that capital. But it is like Pete said, if something goes down and you get scared, you don't know why you're in it, or you should, and which means you shouldn't be in it. You should be confident if it goes down, and you're not going to win them all. So things could still obviously happen, but it shouldn't worry you or knock you around.
Could you jump back to that just real quickly while we're here? I thought we might as well roll through it. Could you click on in Finance Yahoo, top link? Top one? Yep. Let's have a little look at the behind the scenes.
Let's have a look at that.
Can you click on statistics at the top? Sweet. So a few different things, like obviously there's many different things you can look at here. You can look at their trailing price to earnings ratio, their forward price to earnings ratio, price to sales ratio, price to book ratio. They've actually got a really good price to book ratio for a company that's very digital like that, 1.78.
So one stat that I heard in that also DumbMoney breakdown is they had $2 billion of cash and a $20 billion valuation, which apparently is a very good ratio. But now they've only got a $15 billion valuation and they still had $2 billion of cash.
Yes, we'll get to that in a minute, I reckon. So if we look at, again, profitability, profit margin of 9.11%, which, that's not bad at all. Shares outstanding, float, percent held by insiders is 2.48%. You're always like, whenever you see more percent held by insiders, like you always get more and more confident that they feel like it's a good business. Just scroll down a little bit for us.
Which is people in the company buying their shares back from the public.
I like it. When we've got revenue, so revenue of 10.76 billion, not bad. Revenue per share is $18.8. Quarterly revenue growth of 4.1%, but we're expecting that to increase a lot. Then we got gross profit, EBITDA of 3.8, net income of 878, which is cool. You can see total cash on hand, like you said, $2.17 billion. Total cash per share on hand is $3.32. Debt is $15.03 billion, which is quite high, actually. That's quite a high amount of debt for the size of the company and the amount of revenue and profits that they've got coming in. One thing, I'm reading The Intelligent Investor at the moment by Benjamin Graham, and one thing he looks for is with 4 years profit, can they pay off their debt? Is one of the things that he would look for, and Warren Buffett would look for as well. So there's going to be, and it's not everything has to tick every box, but there's going to be certain things you go, oh, that's a lot of debt. But then you want to understand what that debt is, and is it good debt? Is it bad debt? Like, how is that sitting?
Because a lot of people hear debt and they're like, that's bad.
Exactly. So if you scroll up to the top real quickly, we'll do one more thing on this one. If you go to the financials, click on that, give her a little tickle. And if we scroll down, what I want you to do,
this little 1.8% bump before the
show. A little bump. Where you've got the arrows coming across, can you just click on the arrows to just, so not total revenue. Yep. So operating expenses. Yep. The depreciation as well. Like, put that up for me. Cool. That's good. Click on that one too. All right. And get rid of those now for me if you can. I was just having a quick look at those. So get rid of those ones. Cool. So what we can see here now, if you scroll up to the top, is you can compare year to year. So we can go like this year, the TTM is trailing, basically what's trailing from the previous 12 months. We can see here that our revenue has gone from, 6 billion or 7 billion to 10.5 to 11.1 to 10.6 and currently 10.78. So they haven't seen actually a lot of growth in their revenue so far in any of the financials that they've released, but hopefully, obviously, we see that coming up soon. If you scroll down to maybe their net profit, which should be down the bottom. If you take a little scroll for me. Where are we? Just scroll up a tad. What's our net profit sitting in here?
Is he in?
So we got a gross profit. Gross profit's fine, and a net income. Oh, that's right. It will be down the bottom somewhere. Don't know why we can't find it. Net interest income. Really weird, unless I'm going blind. But I'm interested to see. And you can also look at their debt too. So if you just go to their balance sheet, so you can just scroll up and click balance sheet, which is next to income statement. Just nerding out a little bit here on this share.
Oh yeah,
is we can
it's funny
actually
how Yahoo own finance data.
Yeah, it's so good.
They didn't do anything else well, except for everyone goes to them for the finance data now.
No, they've nailed this. So you can look at their debt over time. Is it going up? Is it going down? And then just researching the company, understanding like where that debt is. Like, are they investing or like borrowing money in order to grow very fast? That would be really good debt. Or are they picking up debt because COVID hit them and they've got to pay more often? Or are they diluting their shares? Whatever that may look like. So over time, you can see that they have increased the amount of shares issued too. So what that means is we couldn't look at their stock price from, because we were talking market cap earlier, we couldn't look at their stock price from 2017 and compare it to today without doing some sums, because there were 546,000 shares and now there's 718,000, which means they've raised capital through issuing shares. So there's a whole lot we can look at. We won't go full geek on this. Maybe we can do this in another video, but it's interesting to see behind the scenes of the company and understand where are they at the moment and what are they doing. And you can see their net assets increase as well. So there's some positives. Absolutely.
Yeah, very cool to do. Very cool. Maybe we should do a like a short video. If you did like 10 minutes of like explaining how to do some fundamental analysis using Yahoo Finance, I would love to see that.
That would be cool. We'll go through one of the stocks we picked that hopefully keeps going up. I'm interested because at the start you said the one thing you've learned is you've got to put more money in to make more money. And then in your IPO, you chucked in like $7.
In my next one, in this one?
Yeah.
Yeah, it's true. It's true. I wanted to put more in, but I had to sell some other shares because I didn't have actual like cash sitting in my investment account. And it took like 3 days for those funds to clear. And by the time it had already IPO'd. But I'll have you know that I'm currently in an IPO as of Tuesday, I believe it IPOs. And I've got a much bigger amount in.
Yes.
Not much bigger, a substantial amount in. And I'll go through that now because this is some exciting stuff. And
I'm super keen.
I really want to emphasize at this part that this is definitely not financial advice.
Definitely not financial advice right now.
You are nuts if you're following this as financial advice. This may inform you on how we do things and give you some ideas to actually learn more about finances. But if you're like, what I'm about to show you is very exciting to me, and I think a lot of people might get very excited by it. I don't understand how it works. Like, there's literally things on this IPO center, the bunches of numbers, and some, I think some don't even IPO. I don't know if you lose your money if they don't IPO or if you get it back. Like, there's so much that I don't know about it, but I'm learning and I'll document it here. But don't blindly follow any of this because it's definitely not financial advice. But
you told me to.
I was in another IPO. It's called Transcode. And I only had $132 in the account that I was able to actually put in that wasn't tied up in a trade. So I bought 33 of them. And you can see I made 27% of my money by the time I sold. Now, I actually don't know. We can actually have a quick look to see what that peaked at. So it looked like, so I got in at $4, didn't I? And I peaked at $6.08 and I sold at $5. So also these things are IPOing while I'm sleeping too. And it's almost a good thing because I'm not like addictively refreshing things, but I have to wait like 8 hours after the IPO to actually wake up to see how it went. So I don't see really much of these. I wake up and I saw the first one, I was up 150. I should have sold, which I learned by this next one, because when I woke up, I sold it at where it was at there, which was 30% up. And I mean, that's, like we said, we put like pennies in there, but these percentages are insane percentages. But it is in a way a form of gambling. So I'm like, cool, I need to know if I am gambling on this, where do the odds actually lie? And for those of you who don't know, I'll quickly pull up what I'm actually doing here. So an IPO is when a business goes from private to public. It's called initial public offering, and it allows anybody, any investor, you don't have to be an accredited investor who gets in on private rounds, can start to buy that stock. And because you're opening it up to more people, it doesn't normally go up, but more people have opportunity to buy that. And the more people buy it, the more shares go up. That's what we'll talk about with the market cap. So inside WeBull, which is an app that I use to actually make trades, you go to this bit down here. This could be backwards and everything, but just symbolically, there's something called an IPO center in there. And there's one available at the moment, which this is the one I'm part of at a little bit of a higher Inspira Technologies. I've placed an order in there, and it gives you a range of where you'll get the stock at. So this is $5.50 to $7.50. For this transcode one, it gave me a range, and I ended up getting it $4. Now, these are still pre-IPO. You're getting it at before it goes public because through this IPO center. And I'm like, is this some form of social app? I know there's actually looked it up. The IPO center has been there a while. But there's a lot of kids and a lot of investors like myself who use WeBull, who aren't actually that good at investing, but everyone hears IPO and they're like, that's a good way to make money. Because normally the founders of the company all become billionaires when someone IPOs. So what I did is I went back to the last, and I only did 31, last 31 IPOs, 20 minutes before this call. And these are the ticker symbols here. This was the price. You can tell I did not have time to spend on this sheet, but the numbers are all here. These are the prices that you could have got it at in the IPO center. These are the highest price that they hit. If you sold at the top, this is the price that you would have got for it. Turn that into a dollar figure. This is if you sold at the top, what sort of return on investment you would get for that, for joining that IPO. Again, you're not going to sell at the top. There's no way it's the top. You're not trading fundamental or technical or even social analysis. You're like, I think this might be the top, and you sell. Like, you're not going to hit that. This is where they're currently at. Now, these are all probably over the last 2 or 3 weeks. These are the companies that IPO'd. It's not all of them either, but this is where they're currently at. So ranging from about 3 weeks ago down here to the one that I was a part of, one of these, like I don't even know which one it is. Oh no, it was above it. There was a couple that hadn't quite IPO'd yet that I skipped, all the way to like a couple of days ago. These ones IPO'd. Now you can see, Pete, there's a lot of blue or green or dark gray.
All gray. It's hard to say.
Gray. I don't mean to offend you, sir, but there was only 2 IPO trades here that were in the negative. One basically hadn't lost anything. You kept your money. And this one down here, MF, I'm sorry if you were part of MF, you'll literally bet on the only horse that lost in the last 3 weeks. Now, if you scroll down a little bit further, these are the average returns. This is obviously the average you get in a week and a half, and this is the average you get if you sell at the peak. I'm not educated on this. I don't know. There's a couple, you can see these hundreds in here. There's a couple that I don't know if they didn't IPO, but their stock price didn't move at all. And I'm wondering if you'd lose your money there. I'm not sure.
When you've got this sheet, sorry, just so I can understand it. So 100% means 0.
Yeah, it is currently 100% of the price.
Okay, so it's not a price increase, it's of the price.
Yeah. Terrible.
Very confusing.
Terrible way to represent it. But it is $10 is 100% of $10 is what I'm telling everybody.
Gotcha.
This is a 0% increase.
I see some thousands. Shit. Look at that. Well then, I need to become a US resident so I can start doing this, because WeBull's only for US residents.
So this is, and you can get a social security as an Australian, as I do, but this is like, it seems like a no-brainer. I need to do more research. Like I said, I've only done 20 minutes research, but I've gone in for a bigger position on this next IPO on Tuesday. And with some luck, it should double and I'll report back. There's obviously something that we're missing. And I will put my finger on that. But what I like to do is just have skin in the game and do it and lose some money or win some money. And that's why we're doing this whole challenge, because I'm not interested in figuring out how IPOs work unless I have something to gain from it. I wouldn't be looking in this. So I'm sort of just going through and testing this all myself. But at the moment, I will be probably joining every IPO on WeBull. I'll probably just put, out of my 30 Gs, I'll probably put 5 to 6 Gs towards just like going into every IPO, and I'll have to figure out some of the allocations.
I'm just currently going through, as you can see on your screen, most likely, and just changing it to see what did they actually make as a positive. And then I'm wondering, we can do this live now, is if we were to put 50,000 in each and just go, or 30,000, we have $30,000. You put 30,000 times by, oops, fuck that, didn't I?
Which number are you using? The current number?
I'm using the current number. Yeah, we can do the other one as well.
I use the current number, but it'll be a number higher than that, because you wouldn't hold for a week or 3 weeks. The game would be to sell the day of the IPO.
Just putting that in there. Times by that.
The other thing I did look for some YouTube videos or someone explaining like IPOs or WeBull IPO Center, or someone doing some form of analysis, or like, like I only went 31 companies back. Maybe we're in a bull market, and while we were in a bear market, they all did terribly. Like I know Airbnb, I know CoinSpot. Is it CoinSpot? Have all like gone below what they opened at. So it could be like if we go back to maybe the last 500, it could be the number 500, number 400, all lost money just because it was a bear market. But only going back 31, and I will put more time into it this week and maybe go back the last 500 and actually document when did each IPO actually peak. Because what I saw, rough pattern was it was peaked every like within the first 48 hours, it normally peaked. I'd like to get like that time put on there. So more information coming, but it's a big arrow pointing towards IPO, and a big section of my portfolio will be put towards IPOs.
What I've just done on the side is just pretty much gone, if we put $30,000 into each of these, what would we be up for each? And then down the bottom a sum. So you'd be up $304,000 US if you'd have put $30,000 into each of these each time. And so maybe that holds some merit to going, well, let's create a strategy, and don't steal this. Let's create our own personal strategy, not financial advice, by the way. This is definitely
you could put this advice. Way closer to gambling.
Yeah, this is gambling advice. This is how to possibly lose a lot of money.
Yes. But like, why we would take this gamble is because historically it looks like the odds are in your favor.
And then it's like those financial ads where it sort of says, what is it? Past performance does not equal future performance.
Yeah. It goes on for 6 minutes about how no one is liable.
Yeah. So like if someone goes broke, it was not Benji or I's fault. This is gambling. But looking at this and going, if you'd have done each of these, and I don't know the time span here, a few weeks, few months maybe, but the last 31 of these, if you had put 30K in each of them, you'd currently be $304,000 up, which is pretty impressive.
And that's also not compounding on itself. If you took 30K, put it in that day, took it out and put it in the next one, you'd have compounding results on that.
Well, it just depends, do you just go, I'm going to limit risk by doing 30K at a time every single time? So then you're locking in gains, or are you reinvesting, and how does that reinvestment work? But I think we've gone down some rabbit holes here. This is good though. This is exciting. I can't wait to join America and become a citizen. Get my, what is it, social security number?
God bless America.
God bless America. Oh, amazing.
Yeah.
Well,
yeah. This really did excite me. So I'm excited to dig deeper this week. One thing I felt, because I've got my little opportunity sheet here. I'm going to put IPOs over here because it is another thing I'm heading. I think I've felt myself a little bit too stretched when I've got all these things to do. So I think when I set my intentions this week, I'm going to pick IPOs. I'm going to go really get a deep understanding of these IPOs before I move on to the next one. A little shiny object.
Definitely. And I think I'm going to be very similar in that I'm going to be going sort of one thing at a time. And, my focus so far has been putting money in good businesses that I see good long-term and medium-term potentials for, and also understanding when to take profits from those, which is, you never really know, right? But hopefully when they're in the black, but looking at when to take those profits and how to reinvest those in order to turn it into more money over time. I think that'll be a whole discussion for another day. Is when do you take money out? When do we take money out?
Yeah.
When do you lock in
Definitely.
profits? What would you look for? So
Would you advise they do it at the top?
if you can do it at the peak, but most people,
That'd be
they
my
buy high
advice.
and sell low, to be honest.
Yes. Well,
Yeah.
that's the good one. Is the Warren Buffett quote, like, be greedy when others are fearful and fearful when others are greedy?
Yeah, pretty much, which actually came from The Intelligent Investor. It came from Benjamin Graham, who was one of his mentors. And it's super interesting listening to the it's a hard book to listen to. Like, it's genuinely bloody hard. Like, I'm listening to it, just like having to focus, and like, it's just tough. It was written in 1972, I believe. But the lessons in that still ring true today. And it's so interesting listening to that, because Benjamin Graham is pretty much like, Pete Benji, you're idiots. Invest properly, stop gambling. You're speculators, you're not investors. Get out of here. You don't deserve to be here. So it'd be interesting looking at, I guess, the social arb trading. And essentially it is gambling when we're looking at these IPOs going, we know nothing about the company. We know nothing about their long-term prospects. We're trying to get in and then jump out the next day. That's essentially what we're trying to do.
It's a social arb trade.
Yeah, essentially. And I think in the short term, you can make a whole lot more money with that. But I think we have to keep in mind that we can lose a whole lot more money there too. However, we just try and minimize that. We look at risk. We go, these are the last 31 that happened. We understand that the future ones aren't necessarily going to be the same as these ones. However, we feel pretty good that there's a lot of people going into it, more than likely thinking the same sort of things. And the more money that's going into that, the more it drives the share price up, the more money you can make in the shorter term.
And it's good that you're saying that is a short-term thing, because things like this, little loopholes, or like, what was it, the January effect, where people could predict the rest of the year's stock performance on how it did in the first 3 months, it tended to mirror it. But what happens is people catch on to that. So if we're like, oh, the IPOs buy and sell at 48 hours, everyone's going to start selling at 47 hours, then 46 hours, and then we're going to get wiped out all the way to like sell immediately or lose money. And there goes that strategy. And meanwhile, we've turned 30,000 to 300,000, but the whole strategy is going, we need to find another one. And meanwhile, like, Benjamin Graham's like flying past us like tortoise in the hare. So I think important to note, this is not like 100% of our portfolio. It's not going into this, because we are big believers in index funds and buying the market or buying the whole economy of a country. Because that's like the index fund, the S&P 500, just because I know a lot of people are still learning these terms and stuff. And these terms exist to make it like, we watched a really good video from Business Mastery, Tony Robbins, and he was a guy was speaking. He was like, people have these complex terms to try and keep the common investor out and uneducated. So there's something like a bond is just a loan, but they don't call it a loan, because then everyone would understand what that is and then how to actually start profiting and making money off this. And that's also why we sort of want to start something like this, is because we want to educate other people so that everybody has a chance to actually multiply their money and get that time freedom. So I think I lost where I was going with that, but you want to make sure that, where was I going with that?
I think you were going towards the IPO effect, as we've now coined it, right?
Yeah, right. Is the shorter term thing, the index? This is where I was going. The index funds are a longer term thing, and why that's a longer term thing is because something like the S&P 500 is the top 500 companies in the US. And when you think about that, like, what makes up the US economy, what makes up a actual USA, it's the companies that are producing within that. And so if you're taking the top 500 companies, you're basically just betting on the USA growing year over year. And that's why, instead of trying to pick the individual stocks, which 85% of professionals get that wrong, you might want to just bet on the country as a whole.
Love it. Good description, my man.
Thanks for getting me back on track halfway through.
Yeah, we're back on track now. But I do like the IPO effect. We can coin that one. This is brilliant.
The IPO effect. Yeah.
Maybe we just won't release this video for like 4 or 5 weeks. Just let's lock in some gains on the IPO effect before everyone else jumps on. All of our 3 listeners.
First 3 days you want to hold it for.
Yeah. So I think all in all this week, I feel kind of like Conor McGregor. I went out there. I was feeling good. My leg got
what happened?
snapped.
Did he lose?
My leg got broken. I think he broke his leg or his ankle. Yeah, that's what I did just hear from my friend Robbie Skibicki from Ninja Warrior.
That's sad.
Yeah, that's what I feel like. I started out good. I was feeling awesome, and it all just culminated in my little leg snap here. But we know from bad things, good things come. And I imagine come Monday, tomorrow, we're going to see those rise straight back up. I'm going to be back in the black, looking good, looking real good. And I'm going to be finishing off this week Benjamin Graham's Intelligent Investor. It's hard to swallow, but if you really want to understand fundamental analysis and maybe one of Warren Buffett's main mentors, I'd highly recommend reading this. Even if you're not going to use this, it's really good to understand how he sees investors. And he talks a lot about the emotions of investing through it. And if you can really understand your emotions as an investor and double down on why you make decisions, right? And the one thing I'd say so far, which is my biggest learning, is whenever you buy something, you want to understand, what would you buy this business for? What would you buy a share within this business for without seeing the share price? What is a share worth? If you know how many shares there are, what do you think that's worth? Because if you go do all your sums and you go, this share was worth $5, and then you go check it and it's currently at $7, buy it, absolutely. If it's $5 and it's at like $3, buy it, absolutely. If it's at $7, mix up there. Don't buy it. Don't do that. Don't do that. This is not advice. This is horrible. But essentially, if you're finding that it's then valued higher than what you would want to buy it for, well, then you wouldn't buy that one, or I wouldn't buy that one. And so when I look at it and go, if I've reasoned that I'm going to buy this share, and for WebJet, I think I bought it at like $4.60 or something. If I've reasoned I want to buy it at $4.60 and it's now $4.20, that shouldn't be cause for alarm unless something massive has changed within the business. That should be a really exciting thing, because what that means is I can buy it at an even bigger discount than I first bought it. So I should be looking at ways to generate money, to pull money from the economy, to put more into this, because as long as my calculations were correct and I'm really going to double down on this, put more in. I would put more into that there. And that's my biggest lesson so far, is back yourself, do your calculations, understand what you feel it's worth and where it's going. And when it's on discount, go nuts.
And I like that, because The Intelligent Investor is a headache of a book.
Have you read it?
But I've audiobooked it.
Audiobooked it, yeah.
Audiobooked it. And it's very tough to even to get through.
I'm audiobooking it and I'm like, oh my golly gosh, what am I listening to? They could have got someone exciting to read it, surely.
They could have. I think that didn't help. Get a Stephen Fry.
If Chris Pratt read it, or Ryan Reynolds,
Chris Hemsworth.
Voice.
Talk to me, Chris.
Very. Come on, Chris, if you're watching this, can you please read that book to me?
Potential business idea. But in the world of, like, the attention span of people are getting shorter and shorter. And you see that with TikTok specifically, like 10 to 30 second videos, everything's so snappy and short. And the next one's automatically fed to you, and people's attention spans get really short. And if you find heavier books, or even books in general, a problem, you are missing out on having a competitive advantage in the world. And if you can train yourself to have a longer attention span and actually dig down into the fundamentals, or you dig down into historic things that work, not things that are working like the opposite of what I've been talking about, like the IPO hack. But if you talk about Benjamin Graham's philosophy, it has worked for 100 years. And therefore it's like, it's going to work for a lot longer. It's most likely going to work for a lot longer. You get down into like more fundamental truths, and not things that are sort of like short-term trends or current things that are going on that you can capitalize on. I like to balance both of them myself. But if you can train that attention span, I think it's very, very healthy for you, even if you don't read that book, but you start to pay attention to things that other people don't, and things that will hold more historical truth to them.
And just think about it. When someone writes a book and they were the best in their field, or they're an expert, or just amazing at what they do, they're putting their life's work into this book, and you can get it for like $10. It's an absolute joke that I can get Benjamin Graham, his life's work, everything he's done that turned Warren Buffett into, one of the richest people in the world, worth over $100 billion. And for, I think, $7.50, I can buy that on Audible and listen to it and take in that information. So when you're looking at that, I feel like that gives you a competitive advantage above a lot of other people who aren't willing to do that. And if someone who is so good at what they do has put this down into a book form that you can learn, like, that person becomes your mentor for the time you're reading that book. So we can't give financial advice, but we can give personal mastery advice, is read or listen to one book a week, and one book a week around or from people who are where you want to be essentially. And in 1 year, 2 year, 3 years, you'll be so much closer to where they are than where you are now. And that was the biggest piece of advice I took from my mentors early on, was just learn, listen, action.
Yeah, I love that.
Alrighty. Yeah, on that note, shall we
just before the buzzer, so what I was thinking as well is inside this sheet that we are tracking from, there's a couple of things I want your thoughts on. First of all, we'll make first of all, shout out to everybody who is following along. We have I'm very happy that we've got a couple of hundred people who've watched already between our first 2 episodes. It's only been a couple of weeks and we're really not pushing this. So I think that it validates the idea, and I think people will be following these series as we get more of them. But we'll be making a downloadable, or you can make a copy of this sheet. I'll put it in the link under this video, where if you're doing this challenge, doesn't matter if it's the year 2030 or if it's next week, you can start your challenge if you want to do a $30K, $2 million challenge as well. And I'll put an extra column over here where you can fill out your details and you can track yourself against me and Pete, and see if you can beat our snouts, because I'm sure a lot of you guys will have a lot of cool tactics. And if you're doing that, I'd love to see what you're actually doing so we can learn from you as well. The other thing, Pete, I'd love to put in here, curious on your thoughts, is the S&P 500 growth. And then maybe like a couple of alternative investments, like a real estate mean, or a gold, or even the cryptocurrency index, which I guess this blue line sort of reflects at the moment. What are your thoughts?
Too soon. That's very painful. I reckon we absolutely should. And I think the main thing I would just emphasize with that is it doesn't have to be $30,000. It can be all relative. So if someone wanted to start, I know I've got a friend who's doing it with $5,000. They're going, I'm going to try and turn 5,000 into the equivalent of what 30,000 will be. You can work out whatever percentage that might be. Is just work out, what are you trying to get to? Where are you? Because everyone's at a different stage here. And I think anyone who's looking at getting to where they want to be and achieving the life that they want, it's fantastic. So this will be a resource. I also think another really cool resource we should have is just pretty much every book we read, or all the places that we go for learning, whether it's websites, Audible, hard copy books, whatever it may be. If we start just compiling a document that people can download, I think I would have found that super valuable 5 years ago when I started.
Love that. Yeah, a little resource, like if you linked Yahoo Finance, and then maybe a guide on how you look at things. One thing I'll focus on this, maybe not next week, since I've guaranteed IPO research this week, but maybe the week after. I'd love to go through software and tools where you can find upcoming trends and things that people are searching for. There's some really, really good ones, including like Amazon search data. Like I have a way of accessing a list of every single search term on Amazon in order of how frequently it's searched. So I know what the top 100 search terms are, and you get the update every week. So it's like, right now, it's the Amazon.com. So the US, it's all like pools and air conditioners and like bikinis and things like that. Like all summer beach, there's a massive heat wave going on, and you can start to sort of like socially this information. One thing, Pete, I thought was interesting, because I'd like your thoughts on it, is I was looking at the most viewed sporting event in the world, and it was last Olympics, and it had, I think, 3.6 billion viewers. And I'm like, there are stocks and opportunities coming up next month, because we're just pre-Olympics here, that right now are about a third of what they're going to be in about a month's time. And I'm like, I wonder what they are, and if we can see if we can put our paw on one of those to include to our portfolio. The
Olympic stocks. Oh, we won't discuss this now. We can do a bit of research and find out what are the Olympic stocks.
A little index of Olympic stocks would be cool.
That's cool. That's cool. That's very cool. We'll just cut this off the end of the video.
This will be the intro of
this is the intro of the next one. No, that's got my brain ticking over a little bit.
Because the Olympics are, let me actually show you something real quick that might get people excited.
I'm excited.
So everyone knows, I don't know if everyone knows, but you should know Google Trends. Google Trends, Google makes their data somewhat public. They don't have exact figures, but they show what momentum is behind sort of like searches on Google, which is phenomenal. It was, what is the gymnast rings? Gymnast rings. I think they may have another name, Olympic rings or something. What are the gymnast rings called?
I'll have a look for you.
Gymnastic rings.
Yeah, gymnastic rings. They're cool.
So you want to sort by worldwide. You want to sort as long as we could. These, I believe they correlate. Oh, was it this? Or maybe I'm wrong. It correlated like every 4 years on the Olympics.
No, you're correct.
2012. Yeah.
Yeah, you're very correct.
People watch the Olympics, they watch gymnastics, and they're like, oh, I'll enroll my daughter in gymnast rings. And what I do is I do e-com. So you see like these gymnastic rings skyrocket to the Amazon seller charts. And if you can predict it, like right now, I'd be ordering gymnastic rings from China, getting them in, getting my listing up, ready for that wave. Another one, I know skateboarding is a new event that is just been included in the Olympics this year. And I'm like, well, guess what? I would be selling if I was starting a new e-com something to do with skateboarding. So you can see how you can arbitrage this sort of like Olympic stocks, but this time, instead of starting an actual business, we want to actually put our capital work and not our time.
Yeah. Who makes them? Who makes those things?
Right.
We could also start a business.
I'm not against it.
I'm not against it. I'm not against it at all.
People's business.
Gym rooms. Oh, all right. And we're not liable, obviously, if they snap.
This is not a gymnast ring.
This is not gymnast advice. Oh. This has been good. I felt like today coming in, we weren't going to have heaps to talk about. But I feel like the more we bounced off, the more we're like, wow, this has actually got so much more to it.
Yep.
And just looking at the things that are coming up, I've been diving deep into the fundamental analysis recently. You've been going really hard on the IPOs, gambling, and the Olympics, really. So it'd be awesome to, see where you come next week. And I'm just fingers crossed waiting on my international trading account so I can start jumping in some of these IPOs.
It's going to be too late, sir. It's going to be too late. I'm going to get all the money before this.
That's right. I know you got like $400 in the next one.
I've doubled my investment to 200.
So
good. Dude, good to chat, man.
Amazing.
Make sure if you are watching this and you've made it right to the end, there's no reason why you shouldn't hit that subscribe button below. So you make sure you stay in touch and get the notification when the next ones come out.
And before we sign off, this is not financial advice.
Financial advice.
Just to reiterate that one.
Take it as financial advice.
And we will see you in the next episode, my friends.
See you guys.
Ciao.